Good morning all and welcome to this morning's video. So this morning I have three pairs on watch and those are Euro Kiwi, Soybean USD and West Texas oil. So let's break these pairs down for you now and start off with my favorite of the bunch, which is Euro Kiwi. And we start off as we always do on the daily chart on the higher time frames. We do top down analysis. Those of us who are trading and who wish to trade professionally. So on the higher time frames, I can see that we've tapped above here. Okay, we broke above that area there. We came down, but we fell correctively. Okay, so that gives me a clue. The fact that this move started correctively. Okay, it didn't start in a series of impulses. It started in this larger structure, a running channel to the downside. That gives me a clue that potentially at some stage we're going to come back up to these highs. Okay, the other clue is this. Okay, we retrace about 80% of this move down there. That also gives me a clue that we may push to the upside eventually. Okay, because we have a bit of a near miss to this high. Okay, and we do the same thing again. We kind of near miss to this high. Okay, so that gives me a clue that at some stage we may come up to take out all these near misses, and then we end up with that kind of structure. Okay, but that doesn't mean to say that we can't capitalize on a move to the downside in the meantime. So is there any evidence to support a move to the downside? Well, we have this little area of consolidation here. If you just take this very big move here, I would argue the most impulsive move out of all of this, okay, look what happened. There was an area of consolidation here, and that consolidation caused price to smash through this low and this low and find its way all the way to the bottom there. So that gives me a clue that this area of consolidation is an area of significance. Okay, what other clues are there that it is an area of significance? Well, the fact that we have this three-touch structure here. Okay, so we have the first drive, second drive, third drive. We have the impulse, the more corrective middle section within the structure, and then a more impulsive move out, completing the structure here. Okay, and then we push to the downside aggressively, breaking the structural low there. Okay, so that was a clue that there was actually a lot of liquidity there for that to have occurred. Okay, what you can see here, we did actually break above, but sometimes there's more orders. If an area of significance is an area of significance, it's not uncommon to break above it a little bit more than we did here. So I'm not surprised that we came back up and tapped a little bit higher before the drop. Okay, and then we get this is pretty textbook. We get an impulse correction continuation to the downside, confirming the move to the downside. The clue for me at this moment in time that we're not yet ready to move to the upside to take out these highs, this high and this high that we near missed to that high, is the fact that we broke below these lows. Okay, and price did not find enough liquidity to send it to the upside. Okay, giving me a clue that this is just an impulse correction continuation to push lower to potential, and then perhaps we respond from there and get something more like that, which starts tapping into these highs, or perhaps we get a bit lower, or we push lower down to these lows because we near missed here to this low. Okay, we don't need to know everything that's going to happen, okay, next to make money in trading, but what we do know is that price did not find enough liquidity here at the moment when it smashed through to send it to the upside. And if we just measure, I did this before, if we measure this impulse, usually the leg out of, so when we have the correction afterwards, the impulse afterwards is of a similar length. Okay, we haven't fulfilled that at the minute. And if we take it from the break, because the volume that's been generated within here can often dictate how far we actually go, that takes us down to below here. Okay, and if we just measure this impulse, okay, and measured that to there, that would take us down to the area as well. And notice that there's a sharp move here, sharp move down, fairly sharp move up. So it wouldn't surprise me if we reacted from that area, because there's probably a lot of liquidity there. Okay, so as I drill down, you can see that we've just spiked above this wick now. Okay, so we just drill down. This, to me, initially I was looking for you can see that we're spiked above, but we don't seem to be committing to the downside yet. What I was initially looking for, do apologise, there's I've got the window open because the weather's quite nice here in Scotland at the minute, and there's lots and lots of birds outside, and those birds that you can hear are oyster catchers, okay, and they make a lot of noise, so apologies if you can hear that on the video. Initially I was kind of looking for something more like that to come back up, tap the high, and then go like that. But there was always a chance when you have we kind of have these, when you have a couple of bottoms like that and more of this kind of expanding structure, sometimes price can do this, scoop up, and then drop. Okay, if this low wasn't here, I wouldn't be open to this idea because we wouldn't really have a base. At least at the moment, we have a kind of base there. Okay, we moved off, we created a bottom, so we've got a couple of bottoms to work with. Okay, now one thing I've noticed, and this jumped out at me this morning, is that in the past I used to take a lot of losses. Okay, when we had this, when we have like a high like that, and then we tap the area like that, what I noticed is that a lot of my losing trades used to look like where I'd take an entry where price is now, they would do that and then drop. And then what you'd notice is that this was so when you have this kind of first drive, yes, we kind of have a drive over there, but it doesn't really look part of this. When you have kind of a first drive like that, and then the entry where you get involved looks like this, when there's a little, I used to describe it as a little hump. Okay, when you have a little hump, pardon the expression, to the left of the rejection, and just one like that, when it looks like this, it may be difficult for you to understand what I mean, but usually that does that, and then you get that becomes a reversal structure. Okay, and then you get tagged in, tagged out for the loss, and then it drops in your direction. So that's just something I noticed, that when there's a rejection like that and there's just one high next to it like that, again, it may be difficult for you to understand, but this is something I've seen in my trading journal in some of my older trades. So you can see we're not yet committing. If we look on the 15-minute chart, this is not indicative. We've fallen correctively, okay? So the market hasn't shown its hand yet. So what I'll be waiting for is the following. I'll be waiting for the market to show its hand, okay? That's what I'm looking for. I'm looking for evidence that the bigger players have stepped in. So I'll be looking for a 1 hour impulse down like that, and then I'll be looking for a 15-minute consolidation. So 6 to 8 corrective 15-minute candles, and then I would look to get short on the break or within the flag with what we call a risk entry once we had the two bottoms. Okay, then I'll be able to manage it down to these lows, the base of this structure, for something in the region of 3.5% to 4%. Again, and then I would be targeting, I would set a take profit down here. So I would measure from that range to there, and then I would set take profit at the 90% area, which is where price tends to pull back deeply. You can see we've got about 8% to work with there, but I would also be simultaneously trailing my stop loss. So that is Euro Kiwi. I've set an alert just below that wick there, just to see if we get that impulse down. We have had the rejection. Okay, we have wicked above. We wicked through, not necessarily to. So we might start to see the impulsive momentum come in, especially as it is now 7 a.m. UK time as I speak. So I wouldn't be surprised if this alert triggers literally at the start of this, as this video progresses. Okay, but that is Euro Kiwi. SOYBN USD. SOYBN doing exactly what I was anticipating yesterday. As I said, trading's not about being right. If you're looking at this thinking to yourself, how did you know? I don't know. I don't know what's going to happen next. Okay. And the more we remind ourselves that we don't know what's going to happen next, the more we are open to the things which the market shows us, which we've learned to see as red or green flags to either get into a trade or not get into a trade. Okay. The minute you start thinking you know what's going to happen next, confirmation bias, you see it in politics all the time. Once people have an opinion and they have a strong opinion, they block out anything which doesn't concur with their bias. Okay. That's a perfect example of confirmation bias. Right. SOYBN USD. On the higher time frames, we have a near miss to this high, and we have a first drive, second drive, and potentially at some stage a third drive to complete that move, break above, catch people the wrong side of the market, and then either consolidate sideways to push higher or react from there and push to the downside again. Okay, but once again, doesn't mean to say we can't capitalize on a move to the downside in the meantime. I'm being a little bit more cautious because of the fact that we have a near miss to this little consolidation here, and we've responded. Okay, we have reacted from the area. So either this is profit taking for the next leg lower, okay, or this is just consolidation, volume accumulation for a move to the upside to take out that high, which this high near missed to. Okay, so what makes me think that we could be pushing to the downside? We have the high there, we have this kind of first drive, second drive, we have the middle section again, impulse, corrective middle section, push up, and then we have that kind of structure there. We also have a near miss to that low, which may be taken out, okay? And look how the sequence, look how the move to the upside started. It started with a deep correction right at the start like that, which is not typical, okay? And then, so we broke above, we had the evening star formation, and we pushed to the downside. I was actually looking for trades within here, okay? But I said to you yesterday, as this got, you see things enough and they just get blueprinted in your mind. So at this point, I was looking for shorts, but even then, this was a little bit unusual high up in the run, because normally we'd see this kind of flag slightly lower down. And then, so when we got to here, this whole correction had become a bit too wide for me relative to this move down. And what usually happens in those instances is price breaks out of the structure, taps into the high, and then we respond from there. And we get, as I said yesterday, what we call an M style pattern. And at the moment, at least, that looks like what's happening, or a W style pattern. That looks a little bit dodgy. That what I've just drawn. We'll get that off the chart. So what I'll be looking for, you can see we're having what might be a near miss here. Okay, so if that just sells off, then fine. I'm just going to leave it alone. But what I'll be looking for, I'm not chasing the market. Okay, what this might be is just sellers getting trapped in too early, and then we come back up and do what I'll be looking for today, which will be we tap into that high 1 hour impulse down below the area of interest. So if we tap into that area, I'll be looking for a break back below that, and then if we just zoom out, what would that look like on the? That would be very deliberate on the higher time frames. If you just look at my risk to reward tool there, that doesn't look like buy price action if that was to occur. Okay, so that's what I'll be looking for, a tap into that area, a 1 hour impulse down below the area of interest, followed by a 2-touch 15-minute continuation as a minimum. These are minimum requirements. And then I would look to get short on the break of the flag or within it. And then I would be targeting that low, which would be 90% of this range, which just so happens to be the coincide with that low. So I would actually set, seeing as the 90% is just above that, I would actually set the take profit at the 90%. So whichever is the earliest, and then I would trail my stop loss for potentially about 9.5%. Okay, so that would be what I would be looking for from SOYBN USD. This looks like potentially a little bit of a FOMO move. Okay. Yeah, that to me looks a lot like a FOMO move, okay? When we're that close to a high, what do you think people are going to be doing? When price is in this area, there's going to be a lot of orders because it's so close to that area of value being placed in that area. So if you're trying to sell this here, you're trying to potentially sell whilst people are putting orders in this area, and whilst the orders that are still up there will likely drag price up. Of course, it could sell off, the market could do anything, but these are, if it sells off from here, that would be an example of a cherry-picked scenario which just so happened to work out. And to have an edge in the market, it's not about having having profitable trades that work out in a cherry-picked example. An edge is something which statistically plays out either the majority of the time or which gives you a percentage edge. So you might not place that many winning trades, but the ones you do place give you a statistical edge over the market. That's the whole definition of a technical edge. There are other forms of edges in trading, but that would take me too long to explain. But anyway, that's what I'm going to be looking for. So West Texas responding from the area I was anticipating, but just not necessarily at this moment in time in the way that I was anticipating. So we broke above this high. Okay, I'm not surprised that we had a sell-off there, because we have this structure here, and we have a very big sell-off which took us all the way down to there. Once volume was built and triggered there. Okay, we tap above, we sell off with a similar level of aggression, sharp pullback. That, and the fact that we pulled back quite a lot of this range, okay, we pulled all the way back to there, tells me at some point we may come back up to tap into, especially as we kind of near missed this, tap into this high and potentially that high again. Okay, but once again, just as with Euro Kiwi, that doesn't mean to say that we can't capitalize on a shorter term move in the meantime. And what gives me a clue is the fact that we have the impulse correction continuation, and we've consolidated below this low, suggesting that at this moment in time, price is not ready to move to the upside, and this is just an impulse correction continuation to push lower. If we measure the legs once again, and do that, that takes us down to here, which happens to be the sharpest move out of all of this consolidation, suggesting that's where the liquidity is, and maybe that's where we respond to take us up to this high and potentially this high, which price pulled up sharply towards. Okay, so that's just the theory at the minute. Once again, we don't need to know what's going to happen next to make money in trading. We just need to be able to manage risk. We also have an element of a left, let's try that again, a left shoulder ahead, a right shoulder. We also have the neckline there. Okay, and I'm looking at this wick. You can see that price has moved down. If we just drill down to the 1 hour chart, you can see that price has moved down correctively, and we have a wick there, and we have a 4 hour wick there. Often these wicks get filled. The question I ask myself is, does price have any reason to fill this wick? Well, one of the reasons it might be moving down correctively is because it needs to come back up to tap the base end of all of this, okay, and potentially the neckline of this head and shoulder structure. So that would be a reason why, if this is the area of value, kind of the retest to the back end of all of that, then that would be why price is potentially moving down correctively, because it needs to come up to fill this wick to tap into, and maybe just above all of this, the low of the previous consolidation, for it to be able to move to the downside. So with all of that in mind, whoops, I didn't mean to delete that. I was got carried away there. Right, let's leave that there. I've only got 2 minutes of this video left. So because this could also be, just to touch on it, this could be a bull flag. Okay, so where we get something like that, this comes down. I said yesterday that this could act as the base. I believe I said it on this pair. Because it could be a bull flag, and then we end up with a 1, 2, 3 to push higher, to potentially tap into that area above and then move to the downside, or potentially just move to the upside just because price has other plans. What I'll be doing, I'm not going to be trading within here just because of how price has fallen. That we've had a impulse up followed by a failed continuation that then moves to the downside. This is not good price action. So what I'll be looking for, where does the buy idea that I just drew become invalidated? Well, it becomes invalidated under here. So if we impulse down below here and we get a 3 touch, I said in previous videos that when something could be part of another structure, I always wait for a 3 touch to confirm that it's not part of that structure. Okay, I'll specifically be waiting for a break below here and a 3 touch 15-minute continuation as a minimum, and then I would filter that once again on the 5-minute chart. And if I could get the risk entry, I'll be looking for an entry on the break, and then I'll be able to manage it down to this low for 4.5%. So I have an alert set, and then I would be targeting that sharp move that I told you about there. That's the one. And so yeah, I have an alert set just to see if we can break below. I have an alert set up here to see if we push all the way back up to fill this wick. And that's what I'm going to be looking for from these pairs, folks. Hopefully that was nice and clear for you. I hope you've enjoyed it. I hope it has challenged your perspective or emboldened your perspective if you're already trading this method. But for now, have a great day, and I'll see you again in the next video. Thanks for watching.